Welcome to the LCG weekly market analysis webinar. The usual format here is that we'll just zoom through some of the charts of the major markets, the most popular with LCG traders, but at any time if there's any questions you had, really covering any events that's happening in the market at the moment, or some particular chart pattern you've been looking at, or just wanted to cover a different market that I'm not looking at by default, then certainly send a message through either to the group or to myself individually if you wanted to hide who you are, but it's all an open forum here. I think you should have had a good opportunity now to read through the risk warning on the screen, so I'm going to get rid of that and shift us over to the LCG platform. Now I've got, as you can see here, I've got the three, you can obviously call them dollar Swiss, another major, you can talk about the Aussie and the CAD. I tend to focus on the euro, the pound, dollar yen, the UK 100, Wall Street, Germany 30, they're the biggest indices with global scope, you could say, covering the US, Europe and the UK, and Brent and gold. If we time, maybe talk about the euro and the pound as well. Obviously there's been a lot of political wranglings over the weekend. I think that has been slightly negative for maybe Europe and for the UK, but again a good kind of gauge of that is which in the Brexit negotiations, that is, who's gaining the upper hand. Well, you can see from last week, this was the initial knee-jerk selling of the pound during the when Theresa May triggered Article 50, and then you can see it's really been the euro that's taken the biggest hit against the pound since. We've seen a little bit of an uptick in the euro. Obviously been talk of going to war with Spain over Gibraltar and the likes. Not particularly supportive of sentiment towards the UK, but I would say just a little blip. Obviously the markets in the context of this decline, just a little bit of profit taking really in the pound. So I'm going to go back to the euro. We've got Fed minutes later this week. There's probably the big macro event that we can sort of set our sights on. That's on Wednesday. They're probably, we heard so many Fed speakers last week that we're probably going to see a pretty similar theme to the rates hike itself in March and to the Fed speakers since, that of just, their pre-existing forecasts going according to plan supposedly. So that keeps us on track for a nice sort of 2-3 further rate hikes this year. So looking at the euro here, obviously that's going into those Fed minutes and all that's to be giant bang behind me. I think my noise cancelling headphones might have stopped you from hearing that, but we're all moving offices at the moment, so there's all sorts of fun happening at the moment. Dollar strength really more than euro weakness, I would suggest, but obviously we did see that euro weakness in the pound chart as well. You could see this little yellow line on my chart. It doesn't actually really mean anything. This is just kind of what I was looking for. When you see, so if you pull out to the daily chart, what we had was a couple of steep days of decline ticking below this support here. And what you'll often get in these kind of circumstances, there's almost something akin to a head and shoulders, where people buy the dip, but really they're mistaking that as a dip, where in fact we'd come off a big resistance level up here, we'd had a false breakout, and we'd had 2 hefty days of declines. I was hoping for a few dip buyers to send it a bit higher and then anticipating the market to drop, but we didn't really get that. We had a big old sell-off the following day and the day after, and it was just a big euro selling week, dollar buying week all week. And so this period of dollar weakness, euro strength, is coming unraveled pretty quick. That comes despite today some quite interesting comments from Benoit Coeur at the ECB, saying that the market needs to eventually prepare itself for rate hikes in the Eurozone, which is obviously quite crazy language when we're still money printing, we're still in quantitative easing in Europe. So it's a sign of things to come, and his comments go to support our kind of longer term view here that this is the beginnings of a sort of bottoming pattern, But obviously here was potentially where we broke out the bottom of the pattern. Understandably, the first test of this big selling point, we didn't quite make it. So the next test will be, we're getting this sharp sell-off here. When does the buying interest come back in? Does it come in above these lows over here in order for then to push out again to the top side? No real signs of support being found yet. But what I would do is extend this line across here, because you can see that we had, if you even put it to that initial high, obviously nothing's perfect. They're not all exactly the same price. But if we zoom in a bit here, basically see we've had like 1, 2, 3, the break in the sort of vague hold. We're coming back down to these sort of levels again. I would look for this as the first potential area of support. My suspicion is that maybe it won't quite hold, just because of the force of the selling down. But we're entering areas where buyers might start approaching the market, and then obviously you can lay your fibs on top. Obviously we're sitting right here at the 61.8. Then we've got the actual resistance turn support potentially a little bit below that, and then should the market really get a bit aggressive, we've got this low and the 78.6. Somewhere in here really has to hold for our kind of thesis that it is a buyer's market, and obviously at the moment it's very much a seller's market in the short term. For that longer term bullish bias to come back in, somewhere around here needs to hold. Otherwise, pretty much we're heading back for a drop sub 105, and that's a bit of a game changer. Obviously we've still got these levels over here, sub 105, that can support the market. Ultimately we're still in a trading range, and we're just looking for the time in which maybe we're going to break out. It could be the top side, obviously it's not my anticipation, but certainly could be to the bottom side too. Then we're going to start looking at parity with euro against the dollar. So obviously with an eye on this longer term support, but very much savvy to the fact that at the moment we're breaking down short term. So we saw this support gave way quite clearly last week, had a little bounce through it, and now we're trying to break the next support area here. So potentially a breakup lining up through this long-term 61.8 fib. And as I mentioned, here's another target right here if you're going short the market, and another one down here is the 76.8 with this support in there. So market very much trending lower, and you've got some long-term support potentially as targets for short trades. Shifting over to sterling, let's pull out to a long-term chart first. So again, very much a range-bound condition, and if you jump over to the dollar index, you see that in a trading range as well. It goes some way to explain why both the euro and the pound are also pretty much stuck in a trading range. So this has worked quite well so far. We had this trend line with only 2 touches, but it was interesting we had a little touch there before the break. So I put it on nonetheless, and it actually held, and we've bounced for a couple of days. Now we're starting to roll over. So if you believe that this is something akin to a bearish engulfing, let me zoom in a bit. I'm actually on a bigger screen than I normally am. This is like quite a big graphic design type screen I'm using, so the chart's a little bit bigger than I'm normally used to. Certainly not complaining. But this is almost a bearish engulfing pattern here. Certainly a strong bearish pattern nonetheless. So if you believe that we're just unwinding a bit of this bearish pattern which is going to resume, then we're looking for a breakdown through this low, which is occurring as we speak, in order to send us a bit lower and maybe even through the trend line again. We don't quite know, there's just not a solid trend in place. Obviously we're in a sideways market. The moving averages are below us, which is where we kind of bounced from in combination with this trend line. So there's, if you feel like the market's going higher, in line with these moving averages, which is below the price, then obviously you're looking, if we drop down to the short 4-hour chart, you're basically looking for this area that we held, we struggled at for a while, looked like it might roll over, and then it actually did get the bounce. If we can bounce off there again, that's a good sign. If we start trending into these lows again, then my feeling is it's going to give way to the downside. But like I said, it's tricky conditions at the moment. We break down through the lows and we break out through the highs. It's not a consistent trend. So really in this kind of choppier environment, the best placed trades tend to be the ones yeah, in spite of what I just said, hoping for the trend to resume, the best trades tend to be at the highs, at the lows, assuming that the range will continue. Jumping over to the dollar yen. Here you can see, so this was, we mentioned this for a couple of weeks, that this 111.60, 70 type area was the big support. We did give way. We came back and we didn't just successfully retest and drop lower, we break through it and then we drop down below it again. So it's, the market doesn't quite know which way to go. The one thing that lends me to think that probably we're heading lower is we did have the break and we're below the moving averages. So law of probabilities to me says that we're probably heading lower, but just quite how much of a rebound we get into this decline is anybody's guess. This to me was a kind of bearish event, breaking through that 111.60 odd and 111 indeed, but it's, you know, for such a steep decline to then find resistance at that support and roll over, often what you'll get is the key support breaks, but then we head up back through the support only to roll over somewhere further up here when people will start, you know, kind of forget almost about that bearish event, but buy into it up here, create some buying for the big boys to sell down into again and send us lower. So not clear yet exactly where that resistance is going to come in. You know, all you can have to do is look on the shorter time frame and see if we can break down any of these levels. If we've got to break down through this, which would be the 111.10 and change, again it's kind of 111 that we're looking at, then a bit more confirmation that the downside is coming. To me, it would be it's another one of those situations where if I was to draw in those lines, you know, maybe change the color to yellow again. It's kind of maybe, well, I guess I'm drawing something that's already happened here. If I drew it more like you know, expecting the kind of the rebound off here, and then potentially for us to head lower again is a possibility. Obviously, if we take out that high, you know, then you're extending up towards these kind of resistance areas up here, back above 113, I would say, if this high gets taken out. Quick check for questions is always a good idea at this point. I think the chat was disabled last time, so apologies if you're trying to work into the chat. I do need to address that actually, change the settings so that everyone can type into the chat area. Okay. Switching gears to indices. So obviously, you know, we kind of referenced it in our week ahead video, if you've watched that, myself and Rowena. Well, sorry, no, we didn't do a video this time, but we had an article, and it was, you know, the kind of throwing out the idea of dip buying, because obviously that's what's been going on in the market. You know, rally up, buy the dip, rally up, buy the dip, rally up, you know, and is this another dip to buy? Obviously, we had this sell-off down. You know, people got a little bit worried. You know, obviously all the credit for most of this has been at the door of Donald Trump, so naturally he got some of the blame for this little dip. But nothing materially changed, only really that healthcare issue. You know, obviously I'm talking about US type events, but you know, it's the US markets that are kind of driving the global stock market sentiment here. The FTSE, the UK 100, are arguably a little weaker than some because we're getting this kind of relative strength in the pound, and that pound weakness has been good for these the earnings prospects of these big multinational companies. So at the moment, possibly a oh, I've got everything going in yellow now. Change my color back. So yeah, we've got slight slopes on these lines here. So potentially here a head and shoulders. We really just need this pretty clear-cut support now to give way. Even if it does, I would just be careful. Obviously, we're very overbought in indices, but you know, there's a tendency for a break through the lows, and again, even those dips to be bought into. We're in a big bull market. Always good to pull out to the weekly time frame and remind us of how bullish this market is at the moment, and not to get too heavily short without the justification. So I mean, this is quite a good event from the past, where here's quite a big support level on the weekly chart, push up to moves new highs, we break down, suddenly there's panic at this point, right? But then we just push up to new highs again, so the panic doesn't end up being justified. Similar things down here. We obviously look for the breaks, but sometimes those breaks happen in the middle of the week, and they end up closing the week above, and end up stabilizing again and pushing higher. So got to be yes, the nature of trading, got to be aware of these key levels, try and trade around them, but obviously they'll give and take, and that's why you just got to manage your risk, because we know these things work, but they don't work every time. So back to the opportunities here. Again, it's a very kind of choppy market. I think it would make sense for us to drop and test this head and shoulders neckline level again. So for me, obviously long tail is very choppy. It seems to me like the biggest risk would come from there's a good chance that these lows here get taken out for a little retest, and then maybe a rebound into the support somewhere. If you're, maybe a good time to mention, if you're wondering about the RSI, for me it's something I use visually and don't have particularly strict rules about, but there's, you'll notice here that if we go to the daily chart, you can see that here the way it's pushing in to this kind of 70 level shows that generally the market's quite buoyant, and then we've given away a bit of a trend here, you can see. So obviously the market sentiment has faltered a bit recently, but at the moment we're still holding above the kind of 45 to 40 area, which tends to hold as support in a bullish market. So you can talk about ranges of RSI, obviously overbought above 70, oversold below 30, but in a steadily inclining bull market you could talk about 60, 70 being okay on the top side, 65 to 70 on the top side, but the downside doesn't tend to happen as much with that dip buying phenomenon. Actually 40, 45 tends to hold as a support as a rough guide, instead of the 30 level. You never quite get the 30 oversold extreme in a bull trend. Once you do get to that below 30 idea, then actually that's an early warning signal that maybe the trend is reversing. Let's switch gears to Wall Street. Obviously we've got that, we mentioned that in one of the market snapshot videos. It's kind of working out vaguely well so far. We had a market snapshot specifically on Wall Street, and we referenced this, which doesn't look just the same on a cash chart for the Dow. Obviously the timing is slightly different on the futures markets and how we price these markets. Obviously the price is all much the same, but the way the candle lays. But this was actually quite a very bullish looking candlestick, fortunately for our charts. And the market has pushed higher since. The next challenge really is to get through this quite obvious layer of resistance through here. We didn't quite test it on the first time, but fail 1, fail 2, but we're still kind of vaguely holding on to these moving averages. We need to push through this resistance, and on that daily chart, it's the 20 period moving average. Once you push back through there, then the short-term trend is very much on again. At the moment, there's a bit of it's a bit tentative. We don't quite know if we've got more to go in this decline. Germany 30 been one of the best performing markets. It's a good thing to do when you're trading in the indices is particularly if you are trading even just the Germany 30, you can look at this chart and look at it relative to some of the other markets. And you say it was during this little decline here was what was happening in the Germany 30. Let's see, I've actually got the data right on that. Maybe it was this decline. So if we say the 21st through okay, hold on. Let me pull up to the daily chart so we can get a better read on this. point I'm trying to make is that when the other markets were getting a big sell-off, the DAX pulled back, but really kind of held on to most of its lows, maintained quite a steady uptrend, maintained the 50-day moving average, and then when the sentiment started to pick up in all the global indices, because the DAX had relatively outperformed with a relatively small decline, it has rammed up massively. I think the political risks coming out of Germany a little bit at the moment probably is in France as well. Looks like Macron is set to win the French presidential election. A little less political worry from the European side, maybe a little bit more worry on the US side, which I'm not getting the healthcare bill through. So a bit of money moving from the US to Europe, it seems like. Now this is a big level that I've had on this chart for a long time. I did mention several week aheads ago that I thought this level was going to be retested. We're above 12,400, and if I pull up to this weekly chart, yeah, you can see it's we're basically just shy of record highs now in the DAX in the Germany 30 as we trade it. So that's obviously a big area of resistance, and you know, we're up into fresh bull market territory. Once we get through that record high, we're into obviously record highs. Typically not a bearish sign for a market. What we've obviously got to watch out for is the false break and the opportunity for the market to turn lower. And we're a fair way off this 50-week moving average, lines up with these old peaks back here. So if we were going to get a swift decline in markets, here's an obvious level to say why that would be happening. Okay, and yeah, switching gear to Brent crude. So again, we had a snapshot last week talking about a potential double bottom in Brent crude. We've had the breakout there through the neckline. With this was probably the safest neckline to draw. You could have drawn it probably through this peak over here as well. Then you would have got the daily confirmation would have closed a little bit sooner. It was also above that 20 period moving average, so you could have jumped the gun a little bit here, but we certainly got the close up here, and then we closed again on Friday, looking a bit positive again today. I had redrawn this morning, but it doesn't take too long, because I'm using a different computer. Somehow lost the details, but basically if you use this conservative height, actually I suppose I wasn't really using that. If I get rid of this line temperature, so I'm drawing lines left and right and center, but that is the nature of charting. If you use that conservative low and that conservative peak, then we get pretty much $55 a barrel as a potential target here. So to me, and it's that low that we broke down from the other week. So to me, it seems like we've obviously had a good number of days pushing high in a row, so I wouldn't be expect to see a down day today over the next couple of days. But it seems like a good chance to me that would go up and test that $55 a barrel. Projection of that, the height of the pattern up to the top side, and challenging where we broke down. When we get to there, then I think perhaps about, we have to reassess what is really the outlook for oil here. I don't think that OPEC are going to make larger cuts than previously promised, but they could well extend the existing cuts beyond June, and maybe that will be enough to satisfy the market if the compliance is good so far. All we then need is for signs that US oil demand is picking up, US inventories are dropping off, then we get that supply glut reducing again, which is what pushed the market higher in the first place. Overall, I think we're still just in a range market for oil, but short term looks like we're getting a little pop to the upside. Gold, we've got what was quite a nicely working. Accidentally drawing a different line here. Trying to grab that one. As you can see, we're kind of grinding along this trend line at the moment. We've got a nice pop from the support. If I draw the line through here, to me, this support has been probed, but it's not really been broken. That's even just on the short-term chart. If you go long-term, we didn't get a close below that support, even in the shorter time frames. And we had a nice pop higher. We didn't take out the previous day. So at the moment, the market's a little bit undecided. We obviously fell short of this resistance up here, came back, tested our support. So are we going to break to the top side and move up again, or are we breaking lower? Given that stock markets seem to be recovering and moving along higher with oil prices, maybe oil is about to break to the downside. I've just got a sense that we're breaking down, but I would say there isn't actually the confirmation to tell us it's happening just yet. If we get a little pop again to the top side and then break down through this little support that we seem to be forming at the moment, maybe it'd be ideal if we could get some sort of kind of pivot support breaking above this line. But certainly if this gives way, which is now quite an obvious support around 1241, then I think we can look to a deeper decline in oil, in gold rather. And a 50 to 61.8% retracement has worked quite frequently. I've demonstrated that in last week's webinar. I'm not going to do it again, but gold keeps moving up, retracing by 61.8, moving back in the other direction, retracing by 50. It's good for the Fibonacci's gold. So just watch these levels down here. Could work from this low, or maybe just where the rally kind of kicked off, if you like, which would be these lows here. So that would be a nice little trade if we could get a breakdown to the sort of 1220 vicinity. Well, that was it. I mean, I'm through all the charts that I was going to look at. I haven't seen anything else from you guys in terms of specific other markets to look at. So I think I'm going to call it a day there. Thank you very much for watching. Jasper signing out.